Hello from Chicago. Alan Nuckman, high above the trading floor at the CME Group, talking energy, focus on crude. Rare down day, down $1, 50.50 was the close, so giving back the gains from last week. Last week was the third consecutive positive week in crude as we've had a solid push above 50. Now that 50 level, which was resistance, is now an important support level to keep an eye on a weekly basis. It couldn't get above 50. We traded between 47 and 50 for about 6 weeks, so it's finally above that, coming back down to test that initial breakout. Very important that we maintain that on a weekly basis. Looking at this September surge, the month is over, gained more than 10% in the crude market. Now, seasonally, this is typically when the crude market slows, and this bullishness could come to an end, but not so much last year. So who knows? Looking at the numbers, in the last 25 years, crude has only moved up 40% of the time in this fourth quarter. So that's including October, November, December, so we still got some time. And the average loss for that three-month time frame is about 7.5%. So we've got that seasonal headwind working against us. Looking at the fundamentals, we had a curd cutoff here. So we lost 200,000 barrels per day of production there with more instability and disruption in Iraq, obviously. So that's a temporary issue. Let's see how long it takes to come back online. We've seen this happen before, but what was interesting is the way the market reacted. We had sold off, we were seeing some unwinding, some profit taking, and then it did bounce and bounce up to 50-50. Now, what was significant about last week was that we made some new relative highs, new 4-month highs, got as high as near 53. I think it was 52.90 if I'm not mistaken. But we've talked many times before about 53 is that next measured move target up above. When it couldn't push to 53 or through that, we've seen some profit taking, and we saw a reversal. That Thursday, just last Thursday, we got up to 52.90 and actually closed lower. I wouldn't classify that as a key reversal. That has to be a new year high and a lower close. But it was pretty significant psychologically, and now it needs to build a base again. So let's see if we hold. So other markets to keep an eye on that have an impact on oil. We saw the dollar index move up to the highest level we've been in about 6 weeks, past the 93.50 level. So that's a negative for commodities like crude that are priced in dollars. And a positive would be the stock market. The stock made new all-time highs about the S&P and the Dow today. And we've had a significant surge here, obviously, in the last year. The last 6 months, we have 6 straight positive months in the stock market. So to summarize, crude was down $1 today, 50-50, holding above the $50 level. Keep an eye on that on a weekly basis, and let's see what happens if we get another attempt or swing up to that 53 to give us some more technical information. Alan Nuckman here in Chicago.